We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up GBP, USD. We are in a 12-month time frame. Price action, last candle to the right-hand side, reading as a bullish green candle, spiked down to a low, side by side with the second last candle within that consolidation of the third, fourth, fifth, sixth, seventh, eighth, the last candle, maybe some of the ninth as well. We do have price action overall. Lower lows. Price action overall. Higher highs. Midpoint. Also adding second level lows. Third level lows. And fourth level lows. So I zoom in the price. So current price is sitting at 1.21770. So if price work its way up, it can head to that resistance line at 1.31196. Before tagging that area, it can tag that midpoint nearing the numbers of 1.260.75. If price work its way down, it can tag that support line in red at 1.15865 before tagging that midpoint in that area at 1.19015. So let's take a look at what's happening in the market. So we can see that the market started off at a high. And the market came down. So that market came down, it created levels. So we can see that market, if we draw an imaginary line drawing up to that high, that will be a first leg, second leg, third leg, and we have that fourth leg. So we have a double top. Market broke the midpoint, came back to retest once, twice, overall 3 times, and then the market came down. So we have a double top, a triple retest, and the market dropped down 2 levels. And price second, third, fourth, fifth, sixth, seventh, bottom of the 8th last candle consolidating. Also second last candle is a spike down to a low, which identifying that it did lose a lot of momentum to that downside and maybe reversing to go back up. So if so, market identified as the overall spike down first leg, second leg, third leg, get the engulfment to at least the 7th, maybe the 8th last candle, which will bring the market up to second level lows. And then that market creates that W formation once it reaches that overall midpoint. And then we look for the break and retest for that market to work its way up. If market drops down further, we're looking for a market to break out of this area consolidation and break down to a following level, retest to push down further. Working our way to the 6-month time frame. So price action on the 6-month time frame is reading as a bullish green candle, push spike down to a low. Second last candle is a doji cross, bearish spike down to a low as well. So identified, as I've said before, losing a lot of momentum, maybe reversing. So overall, you can see it as market pushes up from a first, second, third, fourth retest, double bottom and a retest, so overall triple bottom. If market pushes down, it can identify that it broke, came back to retest, which you would see the first, second, third, fourth. Already had that M formation of that double top. Second last candle could be identified. Price second is the retest. And if it drops down with a bearish red candle, but definitely has to engulf that second last candle to the bottom of that wick to show that market is going to really drop down from that wick. Working our way to the 3-month time frame. Price action 3-month time frame, still reading the same candle, bullish green, spike down to a low inside of second, third last candle. So we are still in that area of consolidation with that spike down to a low with the third to last candle. So all that market is reading is that it's a double bottom. So third last candle, first leg, second last candle is the second leg, and the market pushed up. So it pushed up out of that W formation. Price action is a retest of the second and third last candle, and if it pushed up with a bullish green candle, as we walk down the time frame, we'll see a double bottom and a retest. Working our way to the monthly time frame. Price action monthly time frame reading as a bullish green candle spike down to low, doji style second last candle spike up to the high, doji style doji cross. So what's happening is that the second last candle and the price action as we walk down the time frame is probably going to identify as a huge doji, and we're just looking for the breakout of that area. So that market's still identifying that first, second, this will be the third leg for the retest, and we're going to see if it's going to push out and create that W formation. So far we are in consolidation side by side with the price in second, some of the third. Walking down to the weekly. Price action weekly time frame trying to work its way up from the second last candle being a bullish green candle spike down to low, identifying lost a lot of momentum to that bottom, and it can be pushing up from a pattern. So what pattern is coming from? We do have that pattern for that first, second, third, fourth retest. Market pushed up, retest. We're going to see if we're going to push up through that level. So we're looking for price to break this midpoint. We'll add that as we walk down the time frame. Also, this market could be reading as a head and shoulders pattern for a left shoulder, a head, and a right shoulder. Market pushed up. Working our way to the daily time frame reading as a bearish red candle, doji, side by side with the second last candle. Where is it coming from? From the low. So we have that first, second, third. Market pushed up for that fourth leg with the second last candle, retesting the second last candle. If it pushes up, you'll see that double bottom and retest. Or if it breaks through, its market's coming back down just for another touch for that first, second, third, fourth, fifth touch, all together, 3 pushes to the bottom if price work its way back down. So we do know that price is near a midpoint of an area. So we're going to add that midpoint, and we're going to put a zone around it. We'll add that. We'll do that in a 4-hour time frame. Now let's take a look at where price is at and where price is coming from. So price is coming from the high. So if price pushes down from this area, if we do receive that rejection, so price come out the zone, it'll be identified market spiked up for that high. It could be overall first, second, third, fourth, retest, get the engulfment to the downside. Market's coming from a double top and retest. If it pushes up, you're looking for that first, second, third, fourth. So market broke into the zone, got the retest, follow up with the bullish green candle. You see that double bottom and a retest. Market works its way to the top of that zone. Then we look for the break and retest outside of the zone and see if that market is going to push up further. So right now, price in second last candle is retesting the inside of that zone. So we're going to see if it's going to follow up, or if price is going to push down or consolidate sideways. Walking down to the 3, still receiving consolidation. Headed down to the 2, same as well. So still identifying that break and retest. Price second is inside that third last candle. Same as well. So now we're trying to see a pattern forming. So we're still in the overall consolidation of that area. Okay, guys, very important information. Please review and study Forex pattern cheat sheet, breakout retest strategy. Click on images. Okay, guys, this is Cam Jones, FX, GBP, USD.